Hey everyone, Sterling here from Day Trading Forex Live, and it is September 19th, 2012, and we're looking at the pound on a 15-minute chart. Sorry I didn't get the video camera going a little bit sooner, but I was doing the daily market review for the members, and so it took a little while to format that, get the video camera popped up now. And I want to go over this trade that I took about an hour or so back, because I think it's important. It really illustrates a lot of key important points and could be useful for your own trading. And so I like to cover those points, get into why I was actually taking the trade. I'll move this line down here. We'll move this down to where I was actually taking the entry. Let's move that down. Okay, 62.25, and we'll get into why I was taking the entry. I was taking it on this candle here. Mark this with an arrow. So I was taking it as we were pulling back, and mark this out. All right. So as we were taking it as we were pulling back, and I'll get into why I was doing that. But if you guys have seen on the front end of the site, there's a video that talks about chart patterns, and it talks about how chart patterns compress orders, and specifically how the chart pattern of one of the examples I use in there is a triangle. And this is a very good example of how a triangle will compress the orders, and it's why I wanted to show it on here. So as we look at this, and we look at what happens during, let me get rid of these here. So as we look at this triangle that's set out here, we were just compressing, and obviously the price is getting into that tighter and tighter range as you're squeezing through there. And so every day in the review, when we do the review, one thing that we go over is where the high probability manipulation areas are based on where more than likely the orders are sitting. And so when we have the compression of the market, in this case a ascending triangle, you're going to have the compression of orders to outside both of essentially to outside both sides of the triangle. So in this case, you have orders that are compressing above this triangle. The orders are getting tighter and tighter each time it retests, and you have the compression of orders below these lows. It starts out down here. It sets a higher low. The market stops, move up, sets a higher low over here, and the stops again move up, and you have that compression of orders until, from the beginning, maybe your orders were stacked wide out here. By the time you get to the end of this triangle, the orders have then moved up closer to above the nearest high and below the nearest low. And so as you get that compression of orders, that tells us where more than likely they're going to go to start the move. Well, one thing that we know based on how smart money tends to move the price is they tend to move the price in that 3-cycle pattern. And so what we had and what you saw marked a little earlier was this line here earlier I had left on from the daily market review. We had seen the first push down out of the pound and out of what I term as the level 3 type accumulation. And it's no wonder that this move started from one of the 2 points that we were pointing out in yesterday's daily market review. One of the second points I was bringing out was these overall highs over here, and the reason for that is we'd be pushing above this high. And as we push above the high, that's where the orders are. That's why moves start from stop runs, and that's why where they're going to start from tends to be very predictable. You put that with overall market cycle, and it's a very important tool. So if we saw the first push down here, we're expecting the second push today, and the question then becomes, after you determine direction, where is that push going to start from? So to answer that question of where's the push going to start from, we look for the higher probability points. We look for, in this case, the compression of orders. As I zoom back on the 15-minute chart, you can see that the heavy response to this level. And what that does, that tells you that as a general rule of thumb, the retail market is going to be looking at that from a straightforward support and resistance type market. So going into right here, when we have this compression of orders with this ascending triangle, what that tells me is that just gives me even more indication that the retail side of the market is going to have orders on the other side of this. Retail traders are very predictable. If anybody is short, they have their stop just above the last high as a general very good rule of thumb. And if they're long, they have their stop just below the last low. So when there's a clear, highly discernible level that the rest of the market's going to be looking at too, more than likely, if smart money wants to run the price down first, they're going to run the price up into that higher probability level, collect the stops, and start it from there. And when we saw this heavy rejection, again, as it broke through, that's really the key. We want to see it breaking through that high probability level and getting rejected. It showed the clear rejection, and one of the things that I'll use is that rejection candle, or this confirming candle down here. One of the things that I'll use is I'll look for about a 50% pullback of that candle. Now this candle, that's nothing proprietary. That's very common. A lot of people use a 50% retracement. And they do it in a variety of different ways. But this candle is about 14 pips, so 7 pips put us up around this area, the 27, 28 level, and we came into one spot 62.26, started to slide back a little bit, and that's where again where the entry is taken. You can see, move this over to the proper candle there. So you can see as it pulls back, that's where the entry is taken. I guess it hit 25 on the other candle as well, but with this one here, that's where the entry was taken. I was actually hoping for a little bit more pullback, but if you were watching this candle at the same time, you'd remember that we were, well, if you were watching it, more like you don't remember, but we were hesitating at that point. And generally, there's some keys that we can use to know, okay, the market's probably pulled back enough, and I saw the spread tightening on MB, and that's generally a good rule that it's not, it may be done pulling back and it's about to start its move down, and that was in fact where we started down from. But it gave about that 50% pullback where I was taking the entry. Really the key here in what I'm trying to convey is not the entry, the specific entry point. What I'm really trying to convey is the fact that when you look for those higher probability levels and you see a point like this, where the market had so much response to it, to both sides. It was resistance when it was below it, support when it was above it. On top of that, at that exact same point, we're getting a upward triangle forming, with the high of that upward triangle forming right on that same line. It just adds to the fact that there's going to be retail orders above it. So when I see clear manipulation through that point, and the reason I call that manipulation is because as it pushed through there, it was immediately rejected. What that's telling me is that this push through was not a random push through. It wasn't just a random push, through that point. It wasn't just it didn't just happen to false or to break through that point to get rejected. That was an intentional push. They pushed it through that point, took out the stops. As they were taking out the stops, they clearly rejected it from that point. And that's what gave us the final indication to take that trade on the pound. So it was a nice setup. One of the things I don't like about this position was the fact that it was during the Asian session, but because there was such a massive confluence and really as far as another good manipulation point, there really wasn't one around there. The best manipulation point beyond this was the overall highs, and I don't think it's going to quite get there. So when I saw the manipulation early, generally I don't like to take the trades during the Asian session. And preferably you'll see this setup somewhere between 2 and 5 or 8 and 11 tend to be your best times. Again, 2 in the morning, 2 a.m. Eastern to 5 a.m. Eastern, and then 8 to 11 a.m. Eastern. But when you see this manipulation through that chart pattern, just a very, very clear signal that, hey, more than likely they're going to be taking that was the stop taking move, and we should be. Really another key point is that we're in the direction of the overall smart money cycle. I as well have more information on the site for smart money cycles. We'll come back later with the update to this trade. We'll be back shortly, and we'll update the conclusion of this trade. It may be tomorrow because more than likely what I'm going to do now is move the stop to break even at 62.25 and hit the bed and let this trade run. We'll come back more than likely tomorrow. If it does move in the next hour, we'll update it. But if it comes back and moves through the London session, then we'll come back tomorrow with the update and the conclusion to this trade, whether it is a break-even trade or whether it ends up being a trade that comes down and hits our take profit. So we'll be back for that. All right, guys, I'm back with the update to this trade here on the pound. What I'm going to do is we're looking. We had a pretty clean break through 6,200, no real stop run. And at this point, with the fact that we've seen no rejection back up after a full 30-35 minutes of breaking through one spot 6,200, I don't think we're going to see any stop run through that, or at this point we're not going to. And so what I want to do is I want to set a 3-to-1 take profit on this, and the reason for that that we discussed. Actually, I may have been discussing that in the review, kind of getting the videos put together. But just to recap why I want to go 3-to-1, that's a baseline rule that we use, is which you guys have all heard me talk about. If you look at through my videos, is 90 pips as a very baseline rule, and that brings us down to here. And that's typically a good base to start for how far you're going to see the market move on a daily basis. Nowadays, it's a little bit shy of that. That's why the average daily range is up a bit higher. But really, I want to get out ahead of all that. You know, the 90 pip move would be down here. The 200 EMA is here. The average daily range is here. So if they're looking to close out their position for the day, they're short. Therefore, they need to buy it back. So where would the stops be? Where could they induce further further selling to buy into that selling pressure? And where they could do that, or where they could begin to find a massing of orders, is down here in this support region. I don't think they have. I really don't think they'd run it past that point. I don't think we'll see it run past that point today here. So because there'd be because that would be the level where I'd be looking for them to create the stop run on, I don't even really want to get into that level. Because of that, I want to get out ahead of it, and for me, 3-to-1 gets me out well ahead of that position. So with an entry of 25, that would set the take profit at 65, and with entry, or with the close of 65, even the first point that I think could provide some support is that ADR is typically tends to be a point where you start to find some support. In this case, in an ADR low, and it's about 10 pips ahead of that, so I feel it's pretty safe. Gets me out well ahead of that and locks in 3-to-1 take profit. Anyways, I'll be back with the conclusion of this. Hopefully, we'll come down, hit that 3-to-1, and move on from there. So I will be back with the conclusion of this trade tomorrow. See you guys in the morning. Alright guys, so we're back with the conclusion of this trade. Want to walk through the entry. Did end up getting that 3-to-1 take profit hit. As you can see here, we came down and from our entry of 62.25. After this stop run through the highest probability level that we were looking at, we took the entry at 62.25 and had a 3-to-1 take profit on that, which put the take profit at 61.65. As you can see, we came down here and hit 61.62 on the bid on El Paro US, which is what these charts are. On my broker, for most of my trades, I use MB trading, and they run a little bit tighter spread, and actually hit by about a pip and a half on MB. But even on this broker with a little bit wider of a spread, still managed to hit the take profit with about 0.5 of a pip to spare. So not a whole lot to spare there, but still nonetheless hit the take profit. I have another video that'll be coming out a little bit later. We'll see what the follow through is to it, but because that level that we were just discussing on the hourly chart is such a clear level, meaning there's going to be a lot of retail orders in and around that point, I fully expect smart money to come into that level and for that to be a reversal point, or a point where they could use the massive supply to exit their short position. And because I expect them to drive the market into that price, that's why I've taken another short here at 62.02. We had a stop run, the stop run candle through this high probability level that we had identified. It's a psychological barrier of 6,200. It's an already proven resistance point and support point in the past. And so when we saw this stop run through, and let the stop run candle close, and we got the same reason, same real criteria for an entry. We had a 50% pullback of that stop run candle, which is where I was taking the entry, and that's pretty well about the high of that candle. I think it pulled back maybe a pip and a half against me, and has ran off nicely from there. But I fully expect them to drive the market into that point. So if they're going to drive it into that point, do I have, now that I had the signal to entry, or for an entry, do I have the room? Is there enough of a push left there to warrant getting at least a 2-to-1 or possibly 3-to-1 risk reward? And as you can see to the center of this box, you're talking 50 pips. So with the 15 pip stop I have on this, that would easily allow for 2-to-1 or possibly 3-to-1 or higher on this pound trade. And I do have the I managed to get the recorder on in time when I was taking that trade, so I do have the original entry, and I'm not going to walk through it too much because we do that in the next video. So as always, guys, if there's something you didn't understand, we try and cover things as best we can. There's a lot of little pieces to the puzzle you can take away from this video, and if there's certain sections you don't understand, there's a wealth of information on the site. www.daytradingforexlive.com. There's a link below the video if you're viewing this on YouTube. But there's a wealth of information on the site. There's a ton of free information as far as videos and other articles, tips, pointers. And so if you don't understand the smart money cycle, there's videos and articles that discuss that cycle that really break it down from how it moves on a weekly basis to actually what should trigger the entry. And there's also, if you don't understand how smart money uses chart patterns to stack orders, there's an entire video on chart patterns as well. So make sure you go through that. There's a ton of information. And as always, if you have any questions, feel free and shoot us an email. Hover your mouse above the About Us section, and what you'll see is the contact button pop up, and you can go ahead and shoot us an email. We are happy to answer any questions you might have. So I have a couple more videos coming out. We'll see what happens with this pound trade, and we'll get that one out, as well as a euro trade we took a little while back, a couple days back. I'd like to get the video out for that. So we'll have some other videos coming out here shortly as well. And as always, guys, until next time, happy trading.